All right, everyone. Well, thank you for joining on today's webinar. I hope you all can hear me. If you guys want to nod, Kip and Joshua, that would be great. Perfect. Awesome. Thanks for joining everyone in today's webinar with Mutual Trust Life. We have with us today three individuals actually from Mutual Trust Life. We have Joshua Powell and Kip Walker, as well as Kristen Bernoski. And what they're going to be doing is they're going to be talking about business planning concepts. They're going to be talking about everything from their key person insurance design, some business fact finder tools, web-based training, as well as bonus planning tools such as executive bonus, buy-sell agreements, etc. And the main two individuals are going to be Joshua Powell, who is the manager sales development at Mutual Trust Life. Joshua has over 10 years of life insurance experience serving in various capacities, including case management. Since joining the sales team in 2018, Josh has gained extensive experience in case design, product functionality, and the various selling systems supported by MTL. Additionally, he was involved in the implementation of the company's electronic application system and has served as a sales lead on several technology projects that have enhanced customer service for the organization. We also have with us Kip Walker, who is the Regional Vice President, the Midwest region at MTL. He has more than 20 years of financial services experience, specializing in sales training and development in mutual funds, annuities, and life insurance. He is a featured speaker in many industry events and has written numerous articles on sales, marketing, and product application. He holds a Juris Doctor degree as a chartered life underwriter and is a Money Track Circle of Wealth Master Mentor. So, with that said, Kip, why don't you take it away and start talking about the business planning concepts? Give us a full overview. We appreciate it very much. Thank you.
Yeah, thank you, Wade. We really appreciate you having us. We appreciate IFC for hosting this web call. And thank you for the introduction. Yes, I did want to mention that as we go through the presentation, you're going to see reference to Mutual Trust Life Solutions. And I don't want you to get confused. We merged with Pan American 10 years ago. We're in the process of phasing out the Mutual Trust Life Solutions name. Not all the slides have been updated, so you will see that. Don't want you to be surprised by it. And yeah, I am appreciative of you inviting us. And we do also have, I want to mention Kristen Bernoski. And Kristen Bernoski is a fantastic resource for case design and illustrations. And so I encourage you after we go through this presentation to reach out to Kristen, or maybe we'll have an opportunity to follow up with you and learn more about Kristen and what she has to offer and what can bring to the table. So with that, I'm going to jump right in, Wade. And as I mentioned earlier, if you have any comments or questions or anything you just want to jump right in, please do so. I'd much rather this be more of a conversation than just
Yeah,
me
if I just
talking.
want to add, just to add one thing, the lines are muted just for the sake of clarity. But if anyone has any questions, you can pop them in the chat box at the bottom, and we'll address those as we go along.
Perfect. Thanks. So here's a little message from our compliance department, mainly saying that we don't give tax advice. And it also mentions some of the guaranteed interest rates on the products that we'll be talking about today. I want to give you a little bit of background on Pan American for those of you who aren't familiar with us. We are a solidly mid-sized carrier, $7 billion in assets, almost seven and a half, 1.33 billion in revenue. We are in over 22 countries, mostly in the US, Central and South America, 2,200 employees and 7.1 million covered lives. So a solidly mid-sized carrier that is A-rated, big enough to take on any business that you want to bring our way, but we're also small enough that we can be nimble and do things that maybe some of the larger carriers aren't able to do. So I'm going to talk about, excuse me, three business planning concepts: key person, buy, sell, and executive bonus. These are going to be very high level presentations. I encourage you to take notes and ask questions, as I already said. And if you think of a client in your calendar, on your calendar, in your book of business that this might be a good fit for, write that name down. I'm not an expert in business planning, but I know who is, and I know who to get you to. And so that's what I want to do. I want to show you concepts that we know will work. They work for your clients, and we want you to know who you can call and talk to if you have a case. So here's our agenda for key person. We're going to look at who the client is, what a key person is, the benefits of key person planning, and then the solutions. So a key person client is a business owner, and he has maybe several employees, and he wants to retire someday, but maybe he's concerned about losing some of those key employees. What if they left? Would his business survive? Would he still have a business to retire from? Who is a key person? Well, a key person is someone who maybe has special relationships. Maybe they're a sales or marketing guru, and they have these key relationships that if they left, that would impact those contacts. It may be someone with specialized skill, excuse me, or knowledge. And if they have knowledge that nobody else in the company has, what possible impact could that have on the loss of that employee? If you have manager, directors, or project coordinators, how would that impact the company if you were in the middle of a project and then you lost your project coordinator? And you also have key employees who are high-level executives or even owners. If you lost one of these high-level individuals, would the company still be able to survive? So what a key person planning does is it provides financial stability in the immediate death benefit that they receive from the planning. Once this key person has passed, you receive the death benefit, and that allows them to repay loans and maintain credit, replace lost profit, and also cover the cost of hiring and training their replacement. And it also helps them to retain employees because they may be concerned that, hey, if I lose my colleague, the business probably will be okay because we have these plans in place. So there are three valuation methods. Multiple salary is the simplest, and that just looks at the employee's salary and benefits and multiplies that by the number of years that it would take to replace that employee. Contribution to earnings is more appropriate for someone who is maybe a great salesperson, an executive, somebody who actually contributes to the earnings of the company. And so it's a little more complicated, but it really takes into account the lost earnings of losing that key employee and how long, again, it would take to replace them. Replacement cost is more appropriate for a key employee who has that special knowledge. And maybe their special knowledge or skill would cause some customers to leave. So it really talks about lost profits, addresses lost profits as far as determining how much coverage they should have. So there's multiple solutions for a key person. The traditional method is to use term insurance. It's the least expensive. And maybe it will be appropriate for some short-term key person plans, 10 or 20 years. But term insurance is inexpensive for a reason. Only about 3% of it pays out. So in some cases, yes, it'll be an absolutely a good fit. And Mutual Trust has a series of term products called Select Term. We have 10, 15, 20, and 30 year. And a short-term plan may turn into a long-term plan down the road. So they are able to convert all of our term products up to their level paying period or age 70, whichever comes first. So that could allow them to convert that term temporary plan into a permanent plan and start building value there. If they want to build cash value right out of the gate, maybe reserve for the company, and have something more permanent or actually permanent in place, we have a series of permanent products. We have Horizon Value, which is our flagship cash accumulation product. And that would allow them to see that cash accumulating early on and see the value in that plan. We also have Horizon Guarantee, which is more of a death benefit focused product. It has about 25 to 30% lower premium versus our Horizon Value product for a given death benefit. And then we also have a non-par option we just released a few months ago. It's called MTL Non-Par Whole Life. And it's very simple and straightforward, easy to understand. Everything is guaranteed. You know exactly what you're going to have every year of the contract down the road. And all these products are guaranteed age 121. So if you have somebody who just wants to have more predictability and maybe isn't so concerned with the cash accumulation, that'd be a good option as well. We also, for those who are looking to maybe focus more on building that reserve for the company, you have the Vista Life IUL, and that is our really simplified IUL. We went back to the drawing board with that. You have three indexes, the S&P 500, the NASDAQ 100, and the Eurostoxx 50. These are indexes that you can Google and look up on the internet to see how they're doing at any given moment. And we didn't do any of the the bells and whistles where you have the non-guaranteed or I'm sorry, the multipliers, the secondary guarantees, and none of that stuff. The illustrations are 22 pages long as opposed to 50 or 60, and just a great, simple, straightforward product with the performance built right into it. And I'm going to mention this a few times. We have, as Wade mentioned, we have the business planning marketing materials that you can use to help you get the ball rolling on these concepts. Questions that you can ask the client, a checklist of business planning, the business planning process, and many other resources on the agent website available to you, no charge. You also have access to Advanced Markets Online, which is a robust library of additional marketing materials, presentations that you can personalize that they're approved for the client. And it even has a state law digest that's updated constantly. So just a great deal of resources there as well. And finally, you even have access to an estate planning firm. If you have a business planning case and you need to bring in somebody who has a little more expertise in estate planning and business planning, we have the Friedman Law Group, and we keep them on retainer. And if you're working with Mutual Trust on a case like this, you have access to them free of charge as well. So just want to mention those resources. So with that, it's kind of a broad overview of Key Person, Wade. Is there anything you'd like to emphasize or any questions that you'd like to ask?
One thing I would add is, when we're thinking about cases like this, and we can talk about this also at the end, but sometimes some agents feel, well, who's the right candidate for this, or who are the right people I should be talking to, is one component, and also how do I go about pivoting to have that conversation? That's kind of a different topic, but I'll talk about that I think a little bit at the end as well. But no, I just will say from my experience, I see a lot of opportunities out there for our agents that are available, and oftentimes. It's with the agents we work with, it's they think about insuring their business or property, and maybe in some cases too their employees, with some group benefits and things like that. But oftentimes the thing that's not considered is, are we covering our business? Are we covering, what happens if something happens to one of the owners, or is the business protected? So I think just being mindful of this stuff is really important, and we at IFC can help you kind of walk through some of those opportunities as well too.
Absolutely. Yeah. Great. And great points. So the next
And
concept.
if I can jump in for a second, Kip,
Sure.
too, and I was going to say sometimes I look at today's world and I say we have access to everything. And sometimes that can be a little bit overwhelming to the agents out there. And just to know that you have a resource with us, that you don't have to know it all, whether you reach out to Kristen or you reach out to Kip or you reach out to me or you reach out to Wade, we'll help navigate that for you. So you don't have to know it all. So just keep that in mind that, hey, you have a case, you're not sure where to take it. Is this executive bonus? Is this key man? Is this infinite banking? Hey, that's okay. We can help with all that, and we do a pretty good job at it. So just to let you know,
Yes,
you have that resource. And
yeah, you guys do an awesome job, and I can't emphasize that enough as well too. MTL has been great to work with, great resource, super knowledgeable, super timely as well too. You have a question on something, they get back to you right away. So you can contact them directly, contact us, but between the two of us, the two partners, we'll get you all taken care of.
That's right. And yeah, thank you for that and appreciate it. And yeah, it's the responsiveness of our team is fantastic. And the two things that I hear the most from producers is that we know how to get things done, get deals done, and we know how to communicate. And so that just kind of is a testament to that. So thank you. So next we're talking about executive bonus. And so again, we're going to look at the client profile. What is an executive bonus? The benefits and common solutions. So the client is a business owner in business for, well, it can be any number of years. And they have multiple employees, and they're concerned about retaining those employees. They want to keep them. They want to see their business thrive after they're gone, and so they want to make sure that they keep these key employees around. There are many benefits for the employer. They get a tax deduction on the bonus. So what they're doing is they're bonusing their key employee. And in a key person plan, that premium for the policy for the key person plan is not tax deductible. But in the employer, in the deferred, the executive bonus plan, sorry, that bonus to the employee is tax deductible, and then the employee can pay the taxes if it's a single bonus plan, or the employer pays the bonus and the taxes on that bonus for the employee in a double bonus plan. So they can choose if they want to take advantage of that. The great thing is that they don't have to put this into place for all of their employees. It can be one or two, or whatever number of employees that they think are appropriate and that they want to choose, and they can determine how much that bonus will be. It's easy to install and it's easy to administer, not a lot of requirements around it. So you get a pretty big bang for your buck in work effort. And it improves employee recruiting because, of course, they're going to want to stick around. We're slapping the golden handcuffs on them to keep them around. And so that's going to help with retaining those employees and drawing new employees as well. So an executive bonus is similar to a key person plan in that you, in both cases, are insuring a key person, but the goals are different. With a key person plan, you're protecting the business against the loss of that key employee and the impact it would have on the business. With an executive bonus plan, you are trying to retain that employee by offering them additional benefits. Again, the executive bonus plan is non-qualified, and that is different than the key person plan. The executive bonus plan is shown under IRC section 162. And so you may hear it called the section 162 plan sometimes. That's just the executive bonus plan. It also provides cash value for the employee for their living needs that they can access. And you also have the death benefit for the employee's family. So they have that peace of mind that if anything happens, that they will also be taken care of. So what does the employee receive? Well, the employee receives additional compensation. Obviously, he's getting a bonus. Using that bonus to buy life insurance means that the family is going to be taken care of if anything happens to that employee. And the employee gains access and control of the cash value in the policy that they establish. And this is usually done subject to a vesting schedule. So it will delay the access to incentivize that employee to stick around. And for the employee, little or no out-of-pocket expense. And again, the little or no is just dependent on whether it's a single bonus where the employee pays the tax on the bonus, or a double bonus where the employer pays the tax for that employee. So this is a sample presentation taken from our Advanced Markets online library, and it just shows up close how the executive bonus works. In this case, the company, Sample LLC, is paying the bonus directly to the employee. You could set it up where the company actually pays the premium directly to the carrier, in this case, Mutual Trust. So the employee here pays that $10,000 bonus as premium to the carrier and turns around at the end of the year and pays the taxes that are due on that bonus, in this case, a single bonus plan. Now, the family of the employer is going to receive that death benefit if anything were to happen. So in this case, a little over $182,000 would go to the beneficiaries. This is an illustration, an actual illustration showing a maximum funded horizon value. So in this case, we're looking for a high cash value in the design. It doesn't have to be that way, and we can determine what's best for the client if you just bring us the information and what they're trying to accomplish. But in this case, we're max funding this policy. You can see in the first year of that $10,000, you have almost $7,000 of it showing up in the cash value immediately, and almost $166,000 in death benefit. Fast forward 15 years down the road, and now the cash value has grown to over $183,000, and the death benefit for the employee's family is over $413,000. So in this scenario, they have decided after 15 years to pay up the contract. And that you can do that in whole life where you just stop paying premiums. The death benefit will come down to a paid up policy, whatever amount it needs to drop to. And then it will start to grow back up as dividends are paid, and those dividends are used to buy paid up additional insurance. Now, dividends aren't guaranteed, I do want to mention, but we have paid a dividend every single year for over 115 years straight. So odds are you're going to get a dividend, and that just enhances the value of the plan across the board. Now, in age 70, the cash value has continued to grow. There's no new premium going in. It's just growing on its own. And you have almost $228,000 in cash value that employee now is able to access in retirement or for whatever purpose they want to use it for. Now, I also want to mention that we have an additional benefit that this employee would receive in the form of a chronic and critical illness rider. And these are becoming pretty common and pretty popular. It's the no additional premium version, so they don't pay for it unless they use it. And the way they pay for it is an actuarial adjustment down in the death benefit versus what they actually accelerate for the chronic or critical illness that they qualify for. So for chronic illness, they can accelerate anywhere from 5% to 24% of the death benefit on up to $1, and they have to just by their own doctor. It has to be considered permanent, and they have to recertify every year. But it's a great additional benefit for no additional premium. Certainly not a replacement for long-term care, but a great additional benefit that they can take advantage of. And really, at every point in our life now, we are more likely to become disabled than to die. So just a very important benefit as well. So with the type of plan that we can put in place, we're guaranteeing the death benefit to age 121. We have guaranteed cash value growth with those non-guaranteed dividends. You have that strong early cash value that really helps the clients to see the value in the plan and see that cash value grow quickly right out of the gate. And you have, again, our turnkey support and resources that we already mentioned. So Wade, any questions there or any comments? And Joshua?
I was just going to say, I think it's a great plan, and your product is awesome. I mean, if you look at those cash values, it's great, and look at that death benefit too, right? Those paid up additions are purchasing, higher death benefits, so you're going to see that grow. So it's really a win-win across the board. Sometimes I do have, you bring up a good point, regarding the tax deductibility. Sometimes I get questions regarding, well, can, the business own it, get the tax deduction, and then have the individual get the tax break as well too, and it doesn't work both ways. Obviously, with this type of plan, it goes back to ownership, right? Because in this case, you would have the executive, owning the policy, be eligible for that. They'd be paying taxes, and then the deductibility would go to the employer because they're paying the bonus to the executive. So I think for me anyway, sometimes I think an easier way to look at it is think about it in terms of ownership, and what are we doing kind of at the source when it's being funded. I don't know if you wanted to add to that at all, Kip or Joshua, but just my 2 cents.
Yeah, Joshua, do you have anything to add?
Not offhand. It just reminds me, it goes back to what we have on retainer. because I look back at some of my days on the advanced side, and it was really invaluable for agents and agencies to have that resource to know they're doing it right. Because this can be very confusing. And the last thing you want to do is set up something that isn't tax favorable for whichever side. So I just want to reemphasize our law firm that we have on retainer for you, and available to do that. So don't ever be shy, because I know that more and more it seems like a lot of insurance companies have changed there, and they don't have an attorney on staff any longer, and they don't have that resource at all. They just kind of push it off, where we actually do have that resource available for you so that you can be that professional to your agents or to your clients, for that matter. So I just wanted to reemphasize that, and I think that's a great benefit that you highlighted earlier, Kip.
Yeah, that's a great thing to emphasize, Joshua, because these plans, especially now we're going to talk about buy sell, and they've become more complicated since the Conley decision. So definitely want to have the attorney involved, and you can reach out to Doug Friedman and Jessica Friedman, and they're fantastic people to work with and a great resource. So absolutely. All right. Well, we are coming up on the last concept here, which is, as I mentioned, buy sell. And here's our agenda. Again, we'll look at the client, what the agreement is, and some common structures. So this is a business owner. Our client's a business owner. Doesn't have to be a new business. He's just a business owner. And he has multiple partners. And he wants to protect his family in the event that he or one of the partners dies. He wants to protect his family from financial difficulties. But he also wants to protect his business in the event that he dies or one of his partners die, because they may like their partner's family, but you don't really want to be in business typically with your partner's family. A buy-sell agreement is really a will for a business. It spells out what happens if a partner dies or retires. It stipulates that if a partner dies, that their share of the company will be repaid to the surviving owners by his estate. It also explains how the company will be valued, and it ensures that the business can continue, and also that the family will get their fair share of the company. There's three basic structures: cross-purchase, entity-owned or redemption, and wait and see. Cross-purchase is great when you have a few employees, one or two or three, because each employee is buying life insurance. I'm sorry, each owner is buying life insurance on the other owner. And so if you have too many owners, it can be pretty cumbersome. If you have 12 owners buying policies on each other, it gets out of hand pretty quick. So this is typical for those small businesses, or there may be a situation where there's a great disparity between the ages of the owners. You could have a 30-year-old owner buying life insurance on a 65-year-old, so it's just not going to be equitable. Entity-owned buy-sell is when the company owns the policy. And then the death benefit is paid to the company, and then it distributes it to the heirs and ultimately to distribute the cash to the heirs, and that deceased owner's shares cease to exist. And so now the company is owned by in this case, two remaining owners. Then there's wait and see, which is just an agreement that includes language for both types of plans, and then you just wait and see which one you want to use down the road. So the typical solution for a buy-sell is buying a term policy to take care of the death benefit portion, and then investing in a side fund or getting a loan to take care of the retirement part of the plan. And that has some risk to it. We've already talked about, the limits on term policies and They, typically don't pay out, but they also are very inexpensive, and so that's why most people use them. Um, and in many cases, they may fit the bill perfectly, but you still have that concern about, will those funds be invested properly? Will they invest the difference? Will they get the rate of return that they're looking for? And also down the road, will the company be able to get that loan that they need for their retirement portion? And then there's guaranteed UL, and that will cover the length of coverage because it's a lifetime, but it doesn't really accumulate any cash value. And you still have those issues that we mentioned above regarding investment returns and getting that financing. So we think a great solution could be cash value life insurance, in our case, whole life, or even an IUL. We have a Vista Life IUL, as I mentioned, and that could be a great option. So depending on what the client is looking for, we could offer the whole life or the Vista Life, which the whole life will provide that guaranteed death benefit and guaranteed cash value with the dividends. And again, that strong early cash value that we've already talked about. But you don't have to be an expert on which product is going to fit the bill. You just have to ask the questions, find out what the client's trying to accomplish, and then together we can put together an illustration with the help of Kristen, and we might get others involved, and put together a solution that will give you the best chance of closing that sale. So that is pretty much what I want to share with you today. And, hopefully you can identify some clients and, write those names down, reach out if you need materials to make that approach, and, have the questions in your hand to ask, and we can send that out. Wade would be happy to send out samples of the material, some of the materials that we have on the agent website for them, and you can share those. And hopefully, you've thought of a client, and this would be a great way if you haven't worked with Mutual Trust to get started and earn your way towards one of our trips, which are very exciting. We have a trip coming up to Buenos Aires next year. Just went to London this year. And
Wow.
if you haven't, and they treat you like kings and queens. You even get a cash card one night to go have dinner wherever you want. We only try to brainwash you one morning of the trip, and we give you breakfast and talk about us. But other than that, it's just scheduled and unscheduled fun. It's fantastic.
Sure.
If you haven't signed up with Mutual Trust through IFC yet, we will provide you with double credits toward that convention. And so in its very simple terms, what that would mean is if you sold $46,000 of base premium in those first 4 months, that would earn you a trip to Buenos Aires. And that has been done more than a few times. I've had several advisors who, because of the nature of the business we do, the cases just tend to be bigger, especially business cases. But yeah, it's definitely doable, and we look forward to hopefully working with one of you towards that goal.
Wonderful. Anything else to add? You wanted to add to that, Joshua, or?
Yeah, I just was going to say, like Kip said, reach out to Wade, reach out to us. It doesn't matter. It doesn't matter who, I don't think, unless Wade says. Wade and Mo and the team there. The beauty of it is we don't care where you go. We just want to take good care of you. We have a good relationship and growing there with Wade and Mo, along with the team there. And you're never stepping on toes. So it doesn't matter who you reach out to, just reach out and let us know what you need, and we'll start that conversation and take it where it needs to go. So we couldn't appreciate you more, and we just really appreciate the great FMOs out there that are taking great care of their agents like IFC, and we're just here for you. So thank you for your time.
You bet. Well, thank you guys. And one thing I was going to mention too, and I have on the call with me today, Don Teagues, who is actually he's our concierge director. And so what we notice with a lot of agents sometimes, and I mentioned this previously, is it's difficult sometimes for agents to sometimes wrap their head around this stuff, or how do we get started, or who's the right client, and if we find the right client, how do we get started? No, obviously MTL has a great resource to contact them. You can contact Joshua, you can contact Kristen, contact Kip. They're all happy to help out. But with our concierge services, we can actually help you with the client at the point of sale as well. So what I'm going to do, I'm going to follow up on this presentation with an email with some information, and then myself as well as Don is going to be following up with you to discuss a little bit about your book and maybe some opportunities we can help find for you. And then we'll get you started and help get some cases in the door with MTL as well too. Don, do you have anything else to add to that at all, or?
Yeah, so I mean, if this sparked any type of idea, or it's like, I might have a client that would be a good fit for this, but I'm not quite sure. Just give us a call, give Wade a call, Mo, myself, and we will absolutely do some opportunity engineering there and just figure out whether or not that is a good client and where the good fit is. And just want to let you know too that I've been working with MTL probably for the last 12 years, and they're just a solid company. They've actually gotten better over the years where a lot of carriers can't really say that. But I do want to applaud MTL and thank them for their time here today. I really appreciate that.
Thank you, Don.
Absolutely.
Appreciate that.
Yeah, that truer words cannot be spoken. So appreciate that, Don. And yeah, you guys have any questions, give us a call at IFC National Marketing. Our main number is 800 598 5560. Again, you can ask for myself, you can ask for Don. Otherwise, reach out to Joshua, Kip, or Kristen. And then if you guys have any questions, you can pop it on the chat right now. I'm not seeing anything. Here we go. I'm showing here one. Travis just popped in one. Do we have any agent resources? Sample client profiles. There were some cases mentioned, multiple business owners, age gaps between owners, and a few more mentioned. Are these written down somewhere? So I guess the question there would be, do you have any like client profiles or some resources where you can show maybe some examples for example?
Yeah, we do have some resources on the agent website I can pull for you, and I'll send those over. And we also have Advanced Markets Online, which has a ton of resources and information like that. So I'll pull some samples off and get those over to you.
Awesome. Thank you for
You know,
that.
one thing I'll send over Wade also something that our president sent out yesterday. It had some good resources, and it had actually a client example along with an agent example, a little bit different than what Kip will send you. But I think you'll see it as a resource too. And it really just talks about life insurance and why to do it and how to separate it, and then looking at the business side too. So I'll send you that too and use it for whatever you'd like.
Wonderful. Appreciate that. And Travis, as an addendum, just put, I'm big on resources. I love stacking my collection. I'm always happy to receive learning material. Yes, you are, Travis, and I do appreciate that about you, which is awesome. So I'll definitely get you loaded to the gills with information and resources that you'll find useful. So thank you for that. Any other questions here? You guys want to pop up on the chat box at all? Okay, well, it looks like we're all good. Again, as mentioned, we'll be following up after this webinar. Thank you, Kip. Thank you, Joshua. Thank you, Kristen. You guys do a wonderful job as always. And we'll more than likely be having one of the probably many more of these going forward as well too. So keep on the lookout. We're going to keep you posted on these webinars as we move along. So thank you guys very much. You guys have a great day.
Hey, everybody. Thank you.
Thank you very much. Thanks for having us. Appreciate it.
Thank you.
Thanks. Bye-bye.
You too.